They're in a tight spot. They want to be extremely patient in letting inflation come back to target. The reason they want to do that is to keep life in the labour market, which is starting to really flag a little bit. But at the same time, it stretches credibility when you keep on overshooting the inflation target for so long. Their new forecasts don't have inflation getting back to the midpoint until 2026, toward the end of 2026. So, yeah, there's a lot of tough talk here without much action to back it up, just to kind of remind people they are serious about achieving their inflation target.
ANZ Bank penciling in the first rate cut in February next year. So, I mean, how challenging is this becoming for the RBA with other central banks around the world that have been easing or at least signalling, for instance, the ECB arguably having to throw in the towel despite the fact that they are also facing sticky inflation?
Yeah, I think a strong message out of the governor's press conference yesterday is that, the moves by other advanced economy central banks are not going to affect the RBA's timing whatsoever. It's really a matter of where domestic inflation pressures are at. And, clearly the economy is running a bit above capacity. That's why we have such strong inflation still. And converging to, back to the potential of the economy is a slow process and it takes time. I think early next year sounds about right. In fact, we're pushing out our call for the first cut to come in the second quarter of next year. That's only a couple of inflation prints away. It is going to get to a point where the labour market is slackening at that point, but the RBA is going to need a lot of confidence that core inflation measures are coming back down. The headline's going to be very, very volatile over the next couple of prints because of the impact of government subsidies, so we're going to have to basically junk that measure and really focus on what's happening in core inflation. And on the RBA's forecasts, it's still likely to be quite elevated by the start of next year.
Yeah, I hear what you're saying about the sort of spending with the stage 3 tax cuts and perhaps the energy rebates being a bit of a risk there. I mean, what does that mean? Q2 you're suggesting. What does that mean for Aussie dollar? Because, I was speaking to an economist yesterday who suggested it's probably not really what Australia needs right now.
There'll be a little bit of upside for the Aussie if the other central banks have gone a bit further through their cutting cycle by that stage. Again, that'll help with the disinflation process. So, I think there'll be fairly small moves. I think these kind of moves are getting kind of baked into markets now and fairly well understood. If they weren't understood before yesterday, they should be. Cuts are very much not on the RBA's agenda unless things kind of go sideways or outside of what they're envisaging. But, certainly, those that were expecting cuts this year are going to be revising their forecast pretty quickly, I would expect.